Hi, I'm Darius from Walt, Product Development Specialist at Prudential Investment Managers, and today I'm going to talk to you about the fees and charges involved in the administration and management of a unit trust fund. I think it's important for investors to understand the total cost of their investments. For a given level of investment return before fees, the higher the costs and expenses, the lower the actual investment return would be that the investor experiences. While the investment manager will manage the assets inside the unit trust fund as one pool of assets, there are often different fee classes that are offered inside one unit trust. The main difference between different fee classes would be the level of the management fee that is paid to the investment manager for the management of that specific fee class. Different fee classes are usually available to different investors depending on the amount of their investment or the type of investor. Now, management fees can be fixed, which means that the management fee paid to the investment manager is a fixed percentage of the investor's investment amount, or it can be performance related, which means that the level of the management fee paid to the investment manager depends on the level of the performance of the fund relative to some objective or benchmark. So firstly, the TER is the total expense ratio of the fund. Usually, the investment or the management fee paid to the investment manager is the largest portion of the expenses incurred in the administration and management of the fund, but there are other expenses like VAT, audit expenses, custody expenses, and also the management fees and expenses related to any underlying unit trust that the unit trust fund itself invests in. All of these are encapsulated in a figure called the total expense ratio. Then there are also other costs involved in the actual buying and selling of assets inside the unit trust fund. These would be costs like brokerage and securities transfer tax, and they are published in a separate figure called transaction costs. Those two figures, the transaction costs and the total expense ratio, are then combined into a number called the total investment charge, which is reflective of the total expenses and charges involved in the administration and management of the unit trust fund. Performance fee bases typically have a number of elements that work together with each other. Typically, an investment manager will be paid a lower fixed base fee and then share at a specified rate in any outperformance of the fund versus some objective or benchmark over a specific period. Often that performance fee is also capped over a specific period, and sometimes it's also the case that the manager will share in underperformance or that their base fee is reduced in the event of underperformance. The performance fee basis usually could be quite complex, so it is important for investors to try to understand what level of management fee they will pay for different levels of performance. Unit trust performance is always quoted net of fees. So whether that is on the unit trust fund fact sheet or whether it's quoted in the media, the performance quoted will be net of all of the charges and expenses encapsulated in the total investment charge figure. So all the expenses and fees that we've covered today relate to the administration and the management of the unit trust fund itself. But there are two other fees that investors would also need to consider depending on their circumstances. The first would be advice fees, which will be payable if they make use of the services of an advisor. And the second one would be platform administration fees if they do access the unit trust fund via an investment platform or fund supermarket. Thank you very much for watching. I hope you found that useful. If you do have more questions about fees, please contact your financial advisor or our client service center. Thank you.